Good morning, everybody. Richard Calhoun, real estate broker here in Silicon Valley for the last 40 years, working with buyers and sellers. Different transactions, do not do dual agency. We're here today to discuss the real estate market and the impact mostly in the past week. This is some key URLs that you want. The green is the root URL. To get to our weekly presentations, you add in the year code, the 4-digit year. To get to the handout, which was posted already, you add the word handout and then the full 8-digit year, month, date code. And to watch it on YouTube, you just delete the word handout. So you add just the date code to the root URL. Here is the first slide. DUI, days of unsold inventory, is the very key indication. It's the supply demand balance. You have two lines on here. The yellow gold line is the 5-year median. The blue line is the current year data to the left of the first purple line. So this is 2021 data out here. This is 2020 data over here because we're not to that point yet. Notice the drop. There's two things I need to point out. One, I'm not quite sure where this data point came from. I wasn't able to solve it. It should be a little bit above 20, somewhere around 21 days of unsold inventory. It's still phenomenally quick. It's a record low essentially, and I'm just not sure why it's plotting so low. Here's the actual data that I've gotten. Here's the current number of active listings, and this is San Mateo County, Santa Clara County, single family homes, condos, and townhouses, sort of what I'm calling the macro market, 1,632. Then you can see the breakdown. You can see the number of offers that were accepted. The top row is in the past week. The second row is in the past 4 weeks. So you can see that this last week is basically right at the 4-week average. Therefore, when you come down here, there should not be a difference between the two different DUIs. It almost appears that I'm plotting the 18.6, but my formula says I'm plotting the 22. The line wasn't at the 22. I believe the 22 is the accurate number. I also don't understand when you take this number and multiply it by 4, oh, you only get 20. So it is faster. Okay, so it is faster. We've sold more homes in the last 3 feeding weeks than we have in the last week. I need to do a little more investigation. I'm not real comfortable with these. I'm more comfortable with the top row numbers. I would have actually expected the second row numbers, the 4-week numbers, to be higher, and they're lower. I think I might have a 5 instead of a 4 when I'm multiplying it. So I think these may be 20% low. And if you add 20% onto 18, then you're about the level I'm looking at. So I basically would disregard the lower levels of my calculations of DUI, unfortunately. Here is looking at the two components, available listings and demand, offers accepted. The reason there's three lines is we're looking at two different levels of available listings. One is the total available listings, how high is the water in the reservoir, and the other one is how much water came into the reservoir in the last week, how many new listings came on the marketplace. So the total inventory is this blue line, and you can see it's come crashing down, and we're almost right at 100%. So if we were at 100% and we're somewhere around 101%, 102%, we would be having the exactly median inventory we've had for the past 5 years. And it's really not the past 5 years. I didn't include 2020 because it's such a weird year. So it's 2015 through 2019. It's basically a benchmark. Then the gray line is the number of new listings in the past week, and you can see it's also right at 100%. So even though our inventory is essentially at 100% of normal, our offers is way up here at something like 135% of normal. And because you have more demand than you have normally by a third, more than a third, the market is much faster. That's why we have 20 days of unsold inventory instead of a number more like 30, 32, 35 days of unsold inventory, which is still fast. 40 to 80 days in the Bay Area is what I consider to be a balanced marketplace. So we're clearly below that. Now we're looking at just the available inventory, and you can see now the blue line is almost touching the yellow line, and that's where it would be exactly at the median. So this, if I included this year's data into the 5-year median, it probably would populate to be right at 100%. So this is essentially the median level. Going forward, I would expect it to follow the gold line. I don't expect this trend dropping down like this to continue. We can't go too far below what we had in 2015 through 19 because those were 5 good years with very little inventory. Now we're looking at the number of new listings. You can see you're just slightly above, maybe a little bit a higher percentage, but it's still just barely above. This drop off in 2020 will not happen this year. This was because of shelter in place. Nobody listed new listings right after the shelter in place was announced. I expect us to pretty much follow something like the gold path going forward into 2021. Here's the number of new offers. I actually will maintain that we cannot continue this level of new offers with the inventory because it will disappear pretty quickly. If you only have something like 20 weeks, 20 days of unsold inventory, and if you're selling a third more inventory, it's not going to take long before inventory to be zero, and you can't sell something that's not on the marketplace. So this blue line, the number of new offers, is going to have to come down to some degree. How much, I don't know. If we got more listings on the market, I think the number of new offers would actually increase. In other words, there's pent-up demand that can't be satisfied by the limited amount of inventory. This is the closings. It's going to follow the same trend as the number of offers, just delayed by about 4 weeks for the duration of close of escrow, 30 days. Here's the frequency of overbidding. So you can see we're up here at essentially 75% of the sellers are getting more than their asking price. You can see that has come up quite a bit from last year. It was somewhere around 68% just as shelter in place was being announced. Now remember the lag time. So this is the transactions that were started before shelter in place. This drop down is what happened with shelter in place. So with shelter in place, we got down to only 40% of the sellers getting more than their asking price. I expect this to continue to go up, and we may hit record high levels of frequency of overbidding this year. This is the magnitude of overbidding. Last year, you were somewhere around 105%. This year, you're at 107%. That's pretty amazing. This is getting back to the level I would expect it to be. It was artificially low at this part later in 2020 because of the shelter in place insult to the marketplace. Here, these transactions were pretty much negotiated prior to shelter in place. So, the fact that it was at 105 and that we're now at 107, that should be a fairly good comparison. Now, there is the possibility that some of these closings negotiated a lower price to keep the transaction together. There's no way to know, but at 107%, that's pretty good. We were up about 110% at the peak. I think we said Mateo County hit 112%. So we may be going that direction. This is looking at the overbidding distribution for each week. The red line is the current week. The sort of the dark orange line back here is last week. And you can see at the upper end, the red is sort of at the best. Down here, it sort of underperforms a little bit. Basically, as you shift it up and to the right, where this dotted line is, that's as the market improves. This dotted red line is the best month we ever had, which was April 2018. The blue line down here is the worst month we ever had. And then as far as the data points, the dotted lines are the oldest, the dashed lines are the next oldest, and the solid lines are the most recent. So the market is saying the most recent weeks are the best weeks out of the last 20. And I would expect that to be happening just because buyers come out of the woodwork before the sellers put their houses on the marketplace, which drives DUI way down. And that causes the overbidding. This is the same graph, just going back 12 weeks instead of 20 weeks, so you can see it a little bit. The dotted lines are the oldest, then the dashed lines, and then the solid. And you can basically see the trend is up and to the right as we go from dotted lines to dashed lines and from dashed lines to solid lines. Here is the data. Going forward, we're going to be doing things a little bit different. We're going to be looking at 4 weeks of data, and we're going to start at the end of the month because the end of the month is significant. And then we're going to work backwards to the beginning part of the month. So when I report the official numbers, which will be next week, this data will be from February 28th to February 1st. So it will exactly be the month of February. But if we were reporting, say, March data, it would be from March 31st back 28 days, which would be the 4th of March. So it'd be from March the 4th to March the 31st, encompassing 28 days, including the end of the month. And that is my presentation. I will open it up to questions and see if anyone has any for me. Not seeing anyone unmute themselves, I will call it a day and see everybody next week. Again, just to recap, you can get the handout by putting in the base URL, which is the green, then add the word handout, and then the 8-digit year, month, day code. To get to the live presentations, you just put the year code. And then to get to the archives on YouTube, you put in the full code 2021-0306. Have a nice week, everybody. Take care. Bye for now.